Greetings out there, it's Dave Duford at Final Expense Agent Mentor at feagentmentor.com, and today I'm going to answer the question as to why final expense carriers fail. This is an interesting video, one of which is full of my own personal commentary, of which may not be reflective of the reality. I guess what I'm trying to say is that this is my personal opinion as a sales producer, not as necessarily a manager, and is really designed to give perspective to not only just carriers, but as well as to the agents as to why carriers go into the dustbin of history. So the question I pose is, what's the biggest reason why final expense carriers fail at successfully sustaining a final expense product? Well, there's a lot of factors internally, of which, again, I'll admit I'm completely ignorant of. I'm not an insurance product expert in the sense of its financial strength, the risk aversion. I'm not an actuary. All I can report to you are really the ground game of actually the implementation of a product and why you see a lot of these carriers come and go. And so what I'm going to do is actually reference a couple of carriers. I won't specifically name names of the ones that have come in with full force but have completely dissipated. And then through each of the stories that I'm going to give you, I'm going to name the main reason why I believe that these final expense companies fail at sustaining any sort of longevity in the field. Because on one hand, you've got carriers that have been in final expense for an extremely long time. For example, you have Transamerica, who's barely changed any of its premium schedules, nor has it changed really any of its underwriting. You have Aetna, which has effectively stayed the same, besides a few tweaks to its prescription check. And then you've also have, for example, Colombian, which is not a carrier I personally like to use, but has definitely sustained itself in the product it has for quite a while without any major changes. So let's talk about carrier number one. This particular carrier came out, had a very strong product, had a very good pricing schedule. Underwriting was somewhat flexible, at least on the surface of it. But the reason that they checked out within the first year to 2 years of its actual being out in the market is because it was an administrative nightmare. For example, one thing final expense agents all want, if you really think about it, is they want a carrier they can depend upon that's going to issue business as applied for to the highest level possible. Okay, what they don't want, especially, is a carrier that says they'll take a carrier or they'll take a customer, but then comes back a couple days later and reverses its decision. Because you've already sat down with the customer, you've told them what they've applied for and what they are approved for, and now you got to go back to them on a second call and tell them, oh, they changed their mind. A lot of business is lost that way, but even more importantly, a lot of trust is lost by the agent into the company because the company didn't keep its word. And why, as an agent, would I use a company that's going to go back on its word? Here's a carrier right now that I have a contract with. I don't recruit with nearly at all because of one particular circumstance I went through. I got a lady who was told I was approved over the phone. She was approved over the phone. And they came back and reversed decision. And they wanted her to come out of pocket to get medical records to see if we could approve this. And that's a bunch of crap to me. That's not how final expense should be. It should be an up or down vote. You should know before you go if this deal is actually done. And these guys even used that phrase, know before you go. And it wasn't. It was a waste of my time. A very valuable time. If you waste my time as an agent, then I fire you as a carrier. So that's a big problem I see, and a lot of reasons why carriers just don't get off the ground. They don't understand the real particularities of final expense, not just from a product standpoint, but from an implementation and really a marketplace standpoint. These people need to be closed on the first call, 95% of them. The more calls you have in between an eventual sale, the more opportunity the person has to change their mind. And especially they're going to have hurt feelings if they're told they're rejected, especially after they've been told they've been approved for. So that's a big deal for me, and that's one reason why I think carriers need to talk to people who understand this business and understand how to implement design of a product, but make it in a way to where agents can easily rely on the outcome. Doesn't mean that the carrier has to give away the farm and make it too easy to get business, but it should be pretty predictable on how to get the business out there. There should be transparency. There shouldn't be confusion, from the prescriptions, the MIB check, the questions on the application, the less divergence from it, and the more to the point how the app reads, the more agents going to write you because they like you and they trust it and it makes sense. So the next one really has to pertain to the point I made just a second ago in giving away the farm. One of the things I've seen in this business was one particular carrier I love to write, largely because they did issue everything as applied for. But the reality was they just didn't have the product design really well thought out in order to sustain that particular model. And this particular carrier 2 or 3 years ago went from 900 to 3,000 or 4,000 agents in a year. That's a tremendous growth, and could not support the new business. In fact, they weren't even checking they weren't checking the prescriptions. So a lot of agents clean sheeted the applications, meaning they went in, wrote everything down as a no, knowing that the prescription check wasn't going to get checked and that they could get it through issued as applied for. And so a lot of bad business was written. I run into it even today. I had a case last Saturday that had this company, and there's no way he could have gotten it. He's been on oxygen for 6 years. He's every day of his life. He takes COPD prescription inhalers. I may need one right now. It was my little cold. But you get the point is they wrote so much business and they bought up as much premium dollars as they could. But with that, they took in a tremendous volume of adverse risk. And so they went in about 1.5 years to 2 years later, totally pulled back on the underwriting. They made it harder to get business issued, and they fired a bunch of agents on top of that. And so they lost all the premium dollars. So they went from one extreme to the other extreme. And really, I think even to this day, are currently looking for ways to drive more business into their particular product. But they burned a lot of people and a lot of relationships. And really, the product was just poorly designed. That's my point, is that sustainability in this business means, obviously, I don't think that you can be everything to everybody as a final expense carrier. It would be great to have one carrier. And there certainly are carriers that do that. Lincoln Heritage comes to mind, or Senior Life. They're a captive model, and they do write really a tremendous amount of premium. There's absolutely no doubt in my mind that that's the case. The problem is that, for the sake of the clients and really the sake of the agent too, you're not going to get paid as well. Plus, you're not going to get your clients the best coverage because, every carrier has their restrictions. Nobody does everything for everybody. It's just not going to happen in this business, which is why we stay independent so we can have options. So, with this particular situation, as interesting as it was, this particular carrier just got too liberal. I think that's the point, is that the carriers that make it too easy that you can get anything through are asking for trouble. And what happens is you give an agent an inch, you're going to take 1,000 miles. I don't blame them, because we all want the easiest product to implement. But there is a balance between what the agent wants and needs versus what the company needs to make sure happens too, because it's got to be a sustainable product, not just for the short term, but for the long term. I guess the other aspect to this is that, a lot of these carriers, I guess the last point is, a lot of these carriers that never get off the ground just don't differentiate the product. And it doesn't matter if it's small or large. If there's not a lot of product differentiation and it doesn't take a unique standpoint that actually has applicability to the market, then it's never going to really see any, it's not going to grow any wings and fly. For example, there's a particular product on the marketplace right now. It's got a brand name behind it, national Fortune 100 company most likely, in the final expense market now. But nobody's really writing them because there's no compelling reason to. It just has a brand attached to it. And unfortunately, in an independent fashion, it's just not enough. That may captivate new guys and think, oh, I got a brand name behind me. But these people don't care about your brand name. What they care about, as far as the prospects go, what they care about is this company can give me coverage. every day of my life I'm in the field, I sell a carrier they've never heard of. And they only can rely upon my trust and my word to make sure that we fulfill the promise of them having coverage. And that, if you think about it, that's pretty powerful. And it shows you that you don't have to be a brand name entity to compete in the marketplace. But the reason I pick the carriers I want to work with is because of their niche factors. For example, some of the most common niche factors to have are price leaders. I can think in my marketplace, standard life and casualty, family benefit, Trinity Life are all pretty good price leaders with some level of basic flexibility. But they'll tell you, if you ask them, what do you want? What kind of business do you want from us? It's the healthy business. So that's their strategy. But then you've also got the ones that, that will take about anything, and they may have higher pricing. And so they're a little bit more wide open with what they'll take, but their pricing is not necessarily going to be the best. So they're designed for the agent that needs the added flexibility of getting maybe not so healthy people approved. And then you've got the other aspect of it, which is you get a carrier that gives you the ability to write healthy and not so healthy business together, but is easy to write for. Maybe, only does a prescription check like Security National. They've experienced tremendous growth because the product is simple to write for. So either way, I guess the point is, as an agent, because these videos are directed towards the agent, it sounds like most of those videos are directed towards the companies, which it is in a sense. But as an agent, we have to think about what really matters and find the carriers that are going to do it. And my experience is having a carrier that understands the final expense marketplace. A little bit more experience is definitely a good thing because they know what to expect, how to service the people we see, how to underwrite them effectively, and a balance between pricing and really a niche product. You got to know what you want in this business model, and you got to be able to select the carriers that are going to fulfill that. And as an agent, what we're looking for primarily, at least in my agency, is I'm always interested in a price buster. I'm always interested in a bread and butter carrier that takes a whole lot of conditions, that pays decently. And then I'm interested in the niche players that are going to do things like COPD, first aid coverage. We see a lot of that. Maybe that's going to do some kind of graded product that's going to pay well, but also be competitive. Maybe get people who have multiple illnesses in, but I don't have to resort to a low-paying GI product. There's niches in this marketplaces that can be fulfilled because we're always looking for this kind of stuff. But many carriers tend to want to just follow what others do without trying to differentiate themselves, and that's why they fail, really, largely. But they fail to plan ahead and understand what the marketplace is like. So I really don't know why I did this video. I wish there was a carrier out there that would call me up and hire me to ask them advice, because I could tell them exactly what they need to put together to write a successful product in this marketplace, because it's all too obvious to people like myself who've been in the game a long time. But for some reason, there's just always, it tends to be a disconnect between the agent and the agency manager and the actual carrier. So anyways, hopefully you found this interesting, a little different than my videos normally do. Of course, the website's feagentmentor.com. Check it out, my free articles, free final expense training. Thumbs up the video if you liked it. Thumbs down the video if you didn't. Doesn't matter to me. Also, subscribe to my videos, too, if you like what you see and you want to see more of it. And thanks so much for listening again. This is Dave Duford. Log it out. Bye-bye.